Hey there. Gold has survived empires, revolutions, financial crises, and the rise of digital money. In 2025, it remains one of the few assets universally recognized as valuable. Despite offering no yield, no innovation, and no direct utility in the modern economy. So, in a world defined by data, algorithms, and digital currencies, why does gold continue to matter? The answer lies in three enduring principles: trust, scarcity, and permanence. First, trust. Gold's value has never depended on any government, company, or financial institution. It has value because across thousands of years, human societies have repeatedly agreed that it does. This collective trust is not arbitrary, it's the product of history. From the first gold coin struck in ancient Lydia to the reserves stored today in the vaults of New York, London, and Zurich, gold has consistently represented reliability. It is universally recognizable, difficult to counterfeit, and immune to policy mistakes or system failures. In times of crisis, war, inflation, or political instability, gold functions as the ultimate fallback. It is not a promise to pay, it is payment. That distinction separates it from modern currencies, which exist largely as digital entries backed by confidence in central banks. When confidence weakens, people and institutions instinctively return to gold. Second, scarcity. Gold is rare in a way that no human-made currency can replicate. If all the gold ever mined were gathered into one cube, it would measure roughly 22 meters on each side, small enough to fit beneath the Eiffel Tower. And unlike fiat currency, which can be expanded at the discretion of central banks, the global supply of gold increases by only about 1 to 2% per year. This slow, predictable growth rate acts as a natural safeguard against inflation. No government decree or monetary policy can create more gold overnight. Even cryptocurrencies, often described as digital gold, depend on man-made systems, algorithms that can be altered or replaced. Gold's scarcity, on the other hand, is governed by geology. It's not a code. It's a fact of nature. Third, permanent. Gold is chemically stable. It does not corrode, tarnish, or decay. A coin buried for millennia can be cleaned and traded as though it were minted yesterday. That permanence gives it a unique continuity, a connection between past and present economies. While entire financial systems have come and gone, the gold within them remains. In that sense, gold is not only a store of value, it is a store of memory. It links modern finance to ancient trade routes, empires, and civilization. Every ounce mined today carries the same atomic structure as the gold once held by pharaohs, kings, and merchants. No other asset can claim such a record of endurance. These qualities make gold uniquely relevant in a world that grows more complex and unstable each year. Global debt levels are at historic highs. Currencies fluctuate under the weight of inflation and geopolitical tension. Financial systems have become faster and more efficient, but also more exposed to technological risk. In this environment, gold provides something increasingly rare, an asset that exists entirely outside the digital architecture of modern finance. So that's why gold is still so relevant and valuable.